Hi, morning everyone. Welcome back to Morning Cuppa 8 Aiman here. Right, so looking at the S&P 500, well, it closed virtually flat, well, up marginally by 0.02% to close at 7,413 points on Monday session, drifting in a tight range following the two consecutive week of losses. Right, so the equity market were caught in between the sharp drop in the energy prices, well, triggered by the weekend pause in the Middle East strikes, right, and also the ongoing profit taking in the semicon heavyweights ahead of the major mega caps. Tech earnings, and also the key economic data as well. So at this juncture, right, the 7,400 points remain as a strong support level for the S&P 500. Well, so looking at the China A50 futures, well, it rose by 1.2% in Monday's session, leading a strong broad-based rebound across the A shares and also the growth indices. So if you see here, right, this was driven by massive surge in the market turnover exceeding the 2 trillion yuan, fueled by the aggressive risk on flows into the high-tech sectors like the electronic components, higher tech, and also as the domestic investors shock of the global volatility ahead of the key policy catalyst. So, judging on these technical charts, the rebound from this 14,200 points level was solid and looking at a bullish sentiment now. We are confident that the index may resume towards the 15,500 points level, resistance level, after it breached above all the moving average later on. Right, so moving on to the WTI futures, crude oil futures, well, it tumbled around 9% on Monday session to settle around $82 per barrel, right? Recording its largest one-day drop in over 2 months. So the sharp sell-off was triggered by massive, long liquidation as the US and also Iran paused, that military strikes over the weekend, opening up domestic space by Oman in addition, and also diffusing immediate supply disruption fears in the Strait of Hormuz right now. So looking at our Malaysia market, our local market, well, the FBM TLCI rose by 0.71% to close at 1713 points on Monday's session, while the LI outpaced the KLCI, right, with a gain of 1.06%. So the local burst performed its viewed by strength as the budget has returned to core banking last week. So, and I think sentiment was further boosted the regional performance across Asia, which also start to cool off the crude oil volatility. Well, I think now as the confidence has returned back to our market, average and further bullish momentum may push the index futures higher to the 1760 points level, right? So judging on the yesterday's performance, all the in the core the banking heavyweights like the public bank, Maybank, CIB, alongside with the localized surge in the selected tech and also industrial names like the SNS and also Yinsen. However, lingering weakness around the Tyco, the NetGate, speculative profit taking remains. Looking at uh, Yinsen, right? So the stock is on its breakout formation, higher at 1.80 level. 1.85 level on strong volume. With that, we expect the momentum to keep bullish and the stock able to propel higher to test the next resistance level get and also trading at 15 cent level. So if the stock to clear below this 1.70 support, this could reverse the course and trend lower. Also next we have Pentamaster Corporation. So the stocks is experiencing a breakout as well at 5.10 level. So if the stock to remains bullish, the first resistance at 5.35 level, followed by 5.60 level. So do keep an eye at this 4.85 level for any attempt of reversal. And lastly for the we have a bonus stocks right here. So since we talked a lot on the tech sector just now, right? So just to share with you the bonus counter that may have a potential for the bullish to propel higher, which is this counter, which is S&S. So now if you see here, the trend now is solid uptrend momentum. So after we measure the pullback using this Fibonacci retracement, right? Seems that it has rebounded from the 51% golden ratio. So what's next? What's next, right? Okay. Now the projection part. So remember that I always show to you that we are using the Fibonacci projection level, right? So yeah, using this, if the bullish pressure to sustain, we may see that the counter to charge higher towards the 60 and also 65 cent resistance level, right? So talking about the FCPO futures, well, gap down yesterday, fell over 1% on Monday session to close at 4673 ringgit, retreating from its 15 weeks high, right? So I think the sell-off was primarily triggered by the steep 5% plunge in the crude oil prices or benchmark following the pause in the Middle East, right? Yeah, looking at the charts, the commodity charter gap down, but still above the moving average. Well, if bullish momentum to persist, the commodity may charge higher to test at 4,900 ringgit follow after the pullback has completed. So I think that's all from me, and I pass the floor to Max. Thanks everyone, and happy trading.
Thank you, Aiman. So we have a report on Malakoff. So it's a company update. We maintain our buy call and target price was 1.06 ringgit, which presents a 35% upside, and Malakoff gives a 5% yield. Three key points from the report. Number one is that we are looking at the normalization of their Tanjung Bin operations, given that the failure of the steam turbine generator since last November has already sent back to the manufacturer for maintenance works and is on back to resume operation next month. Hence, we do expect the Tanjung Bin power plant to resume full normalization operations from the third quarter onwards, once the turbine is already come in. Hence, we also expect the unscheduled outage rate for the plant to resume next year, which should result in full capacity payments. The other thing is that if you recall, there was an incident at their Tanjung Bin jetty, where they used the conveyor belt to transport the coal. Essentially, the debris has already been removed from the site, and hence they already started resuming the normal operations of transporting coal on the conveyor belt since last month. That said, we have factored in an additional 40 million in terms of additional transshipment costs for this year. But on the upside, management is looking at potential insurance claims for both disruptions. Point number two, Malakoff have also commenced operation for its 3 gas plants. Now, the first one is Pride. They already started in April, whereas GB3 and SEV will commence operation in January and July 2027. These 3 plants essentially got the power purchase extension until 2029-2030, basically just to supply power until the new gas plant comes up. Thirdly, they also have shared that basically they are looking to finalize a new 15-year power purchase agreement for a new 1.4 gigawatt new gas plant in Port Dickson by first half of next year. In our view, the plan essentially would be timely to replace one of their Tanjung bins, which will end operation sometime in 2031. Assuming they win the bid to build this one plant, we assume a 40% accretion to our TP. But do note that Malakoff also is targeting to commission another plant by 2032 as well. Malakoff has already reserved 4 turbines from Mitsubishi for this, and these plants will also likely to be awarded via a direct negotiation rather than a tender exercise. So all in, we did cut our earnings by 14% and about 8 to 9% for the next 3 years, meaning just to reflect the higher transshipment costs and so downtime for the Tanjung Bin power. But our TP is unchanged mainly because we have rolled forward our numbers to next year, where we expect a full normalization of the Tanjung Bin operations. Malakoff still gives you about 5% yield. And again, share price has come off quite a bit from the 1 ringgit sort of levels. So we always view Malakoff as a trading stock. So anytime there's a share price weakness, and given that earnings and operations is on a normalizing trend, we do advocate picking Malakoff shares when it's on share price weakness. So that is all we have today. So we want to wish you a happy trading, and we see you again tomorrow for our morning cuppa.